Let's just handle the short-term supply chain stuff here. These headlines have been coming for a long time. Does it have more credence given what Apple has formally said in the past couple of weeks?
I think it absolutely does, Carl. We were skeptical. I was particularly skeptical around the reports of production cuts before, saying let's wait and see if that actually pans out. It did, and in light of that, and in light of Apple's warning, I actually think this 10% production cut is a good sign, because this isn't so much about the future, I believe, but it's more about the past and inventory management. And if really that's all Apple has to do in order to stay within its target inventory, given that miss that we saw, it means they've been managing their supply chain pretty well. When you see hardware companies have misses based on their guidance and expectations, it's not uncommon to see massive production cuts in order to rebalance the supply chain. That's not what we see here from Apple, Carl.
That's interesting take. David, do you agree? And are you trading or buying or selling the stock based on some of these inventory adjustments, or is it more about the long-term issues that Cook addressed with Cramer last night?
Well, certainly in our position, it's more about the long-term outlook. We've been owners of Apple now going on for 14 straight years. But I will say, the stock, it feels like it's been a death by 1,000 supply cuts. And I do agree with John's assessment. But I think, and again, we can, like Cramer did earlier today, we can, longer-term holders, we can all wax poetically about this amazing future in health and services. And we certainly get that. But I think we need to unpack this China story a little bit more. I understand economic weakness, tariffs, manufacturing's down. I get the patriotic thing, maybe Huawei versus an iPhone at the margin. But one of the things that we need to think about is that when you look at some of the consumption tax receipts in China and the VAT tax receipts, they plunged a couple of months ago. I think the consumption tax in November dropped 70%, and that's on the higher, luxury, higher-end goods. And I think we need to introduce the narrative or the thought of what's going on in China in the real estate market. The real estate market is very different in Greater China than it is in North America. It's almost like an element of a savings account. And we've seen weakness in there. We've seen some price drops just over the last month or so. So in the China, go ahead.
No, I was going to say you don't sound very positive. I don't think this is leading anywhere good.
No, I think this whole idea when the stock was at 233 and now we fell to 142 and we've clawed back about 10 points of that. The narrative went from a consumer staple multiple to a steel mill going, in runoff mode. But I think predicated on that higher sustainable multiple was this idea of a relatively stable iPhone business, maybe 210 million iPhone units a year. That's been the case for the last 4 or 5 years. It looks like consensus right now is about 190, and we had a price increase last year of about 18%. And so until this iPhone story stabilizes, until, again, Captain Obvious here, until cuts in the iPhone franchise taper off, I think we're going to have a hard time for the stock over the near term, maybe climbing back. If we get that, it's open field running to gain back a lot of those points, that 39% drop that we had from September highs, and the stock could post a really good return this year. We still got some work to do on the China front.
On the China front, John, I thought Samsung's numbers were notable yesterday. I don't know if you saw a big miss across the board, citing China weakness, big disappointment in revenue guidance as well. Put that into context around some of Apple's problems. How much of it is just macroeconomic, U.S. trade war, and how much is some of the larger concerns people are talking about with iPhone and innovation? Do we have a better read on an answer?
Sarah, I think that's a great point. A lot of it seems to be macro, maybe not just the Chinese economy so much as what's happening both at the high end of the Chinese economy and what's happening at the high end of the smartphone market in China and globally. But the important point here, I think, as far as Apple's concerned, is it's not as if somebody is beating Apple at its own game. So the question for an investor becomes, do you believe in Apple's game? When you look at the China market longer term, do you think the Chinese middle class continues to grow, to consume technology, to be very mobile focused in how commerce takes place, both digitally and omni-channel in store as well? And then who in China is positioned to do what Apple has done, which is bring together hardware, software, services in a device, and by the way, the retail footprint that they have locally in China, and really compete head to head with Apple for that premium customer. That landscape has not significantly changed, and so Apple's strategic position in China beyond the short term is not necessarily challenged at the level that I think some investor fears might indicate based on how the stock has reacted in the near term.